When we talk about security tokens, general-purpose blockchains generally allow for a few basic functions like ownership, transfers, and restriction through smart contracts. However, these functions are built on the blockchains, but not included in the core of the chain. As a result, general-purpose blockchains feature a number of challenges related to both performance and scalability for security tokens. Polymath, a popular token, set out to fix this problem with the launch of Polymesh, a blockchain include regulated assets, identity, record keeping, capital distribution, corporate governance, and stablecoins. The need for regulatory compliance across multiple jurisdictions is an obvious necessity for security tokens. Speaking of economics of Polymesh, the blockchain will be fueled by its native token, Polyx, and all the transactions will be subject to fees in the form of Polyx. It uses a proof-of-stake consensus mechanism. It consists of validators and nominators that work together to verify transactions. They do not verify regulatory compliance. They rather verify that transactions are in accordance with the blockchain's protocol. Another complicated aspect of security token that it involves juggling identity verification, so if two parties have to make a transaction of the blockchain, it would work like this. Nominators that work together to verify transactions. They do not verify regulatory compliance. They rather verify that transactions are in accordance with the blockchain's protocol. Validators are permissioned entities that process transactions, while nominators are Polyx holders who stake their Polyx in the validators of their choice. When it comes to block rewards, validators receive a certain percentage, while the remainder is distributed to its corresponding nominators in proportion to each nominator's stake. Polymath's existing token, Poly, utilizes Ethereum's ERC20 token standard. For at least 1 year after the launch of Polymesh mainnet, Polymath will facilitate a Poly to Polyx exchange at a rate of 1-to-1. Another complicated aspect of security tokens involves juggling identity verification, a necessary criterion for compliance, while also incorporating privacy. Polymath has developed its confidential transaction workflow to tackle this aspect. If two entities want to perform an on-chain transaction, here's how it would work. The issuer or mediator establishes a trade contract on-chain. The contract is likely to feature a number of restrictions. Zero-knowledge proofs can ensure that at least some of these restrictions are observed, when additional restrictions remain. They can be validated off-chain by a mediator with a digital signature verifying the satisfaction of these restrictions. Both entities digitally sign the contract, and the transaction is completed on-chain. Encrypted details are recorded at the asset's data storage and can be used for reporting as well as other means. Which leads us to governance. Across Polymesh, there are a total of 4 councils. All Polymesh network participants with a verified identity on the network can make proposals to any council. First, there's the main council, followed by 3 sub-councils. Each sub-council has its own specialization. The Technical Council oversees upgrades in the network. The Economic Council watches the network economy, including fees and policies surrounding Polyx. The Ecosystem Council manages ecosystem growth as well as security token partner needs. When it comes to compliance, issuers can leverage smart extensions to enforce asset or jurisdiction-specific compliance rules in real time. All token issuers will remain responsible for the compliance of their token offering. Polymesh aims to facilitate that compliance by providing all the necessary tools, regardless of the asset class or its respective jurisdiction. As Polymath points out, Ethereum is the current blockchain leader when it comes to security token offerings, STOs. According to a 2019 study from Blockstate, 94% of STOs have been powered by Ethereum. Still, however, Ethereum has received notable criticism from security token industry participants due to its lack of scalability. As a result, some companies are now turning to Tezos to power tokenized offerings. Before we reach the end, let's take a brief look at the best case uses of tokenization. 2 of the best use cases would be real estate and fixed income. Real estate is usually illiquid, but now you can get all sorts of information on different developments. With automated structuring and capital distribution processes, Built-in One can anticipate and address many deterrents in advance. There's one immutable record which prevents something so basic as data entry mistakes. What do you think Polymesh will be able to create a difference in the now crypto-dominated world and make it overall better for us? Let us know in the comments below. If you enjoyed this video, make sure you hit that like button and subscribe to the channel, and I will see you in the next one.